Good morning, everybody, and welcome back to Money in the Law, My FM 101.3, the Holliston Hub, with your host, Jay Marsden. He's from the Marsden Law Group. I'm John Drohan from Main Effort Financial, and we are Money in the Law, talking about all things money. Talking about the law. We had a couple, we're at a little bit of a hiatus, so we're coming back. We had a couple, had to take a little early, like pre-spring.
Pre-spring break.
That's right.
That's right.
Somebody went on spring break. Yeah, somebody, like, how old are you?
It was a practice. It was a practice run. It was a practice run. It didn't go well.
Jay had a little spring break trip that he had to go on. Are you a sophomore in college? No, he's not, but
no.
I'm going to walk and talk like I am.
Let me tell you, Lake Havasu this time of the year, unbelievable. Yep. Fantastic.
So just to review, Money in the Law, we talk about things that have to do with money.
Yes, we do.
Your finances, saving, investing, yada, all that fugazi stuff, right? And then we also talk about the law. Primarily, we talk about like planning law, like planning for like what's going to, kind of taking everything that you've accumulated and acquired,
the war chest you have amassed over a lifetime of rock breaking,
and then how that gets situated and positioned so it can pass on to the next generations, and you can see the spoils, the fruits of your labor.
That's right, and you can pass the fruits of your labor on to the fruits of your loin, as we like to say. We don't say it that way, no?
No, they do, but they just don't say it on TV. Yeah, that's it. That's fruits. A lot of fruit talk going on right now. All right. Not unlike the fruit that you get mailed to you from Florida.
That's
Remember
right.
those?
That's
yeah,
right. Yep, that's right.
It's always
that's
like
right.
a big.
Right.
It's funny. It's funny. Speaking of fruit, that happened. As a kid growing up, right?
Sure.
So your parents went to Florida, right? So
they did.
Yeah.
Yes.
So as a kid growing up,
never saw them again.
My great grandmother, not my grandmother, my great grandmother and her sister lived in Florida, and so every probably like this time of year, like early February, we would get a big crate of oranges and grapefruits, and that was like the thing. Every year we would get that, and that was pretty cool, right? Because this is back in the day when
that was a big deal.
It was a huge deal.
Oranges from Florida.
From Florida, so they were better than the ones you could get in the store.
You could ever get. Oh,
right?
who could live like on those other oranges that you buy at the store?
And you remember, and Tom, you probably don't remember this. That there's. Oh, by the way, this is Tom. Tom's here. I forgot. Tom is our Holliston Hub. He is our Holliston Hub executive producer. So, Tom, I'm sorry that that's wrong, right?
Rude.
That's wrong. I was just caught up. I'm a little nervous.
He's caught up in the oranges.
Well, I haven't really. We haven't done this in a while, so I'm like, I just got to shake some of the. But Tom, you probably don't remember this. Do you remember how you drank orange juice as a kid growing up? Where did your orange juice come from?
Look, you have a container.
Was there?
You were hand squeezing.
I'm talking. No. I'm talking about what most people, at least where we were from, where most people got their orange juice was from the frozen concentrate orange juice. You remember that bad boy,
I
right?
remember. Yeah.
So when the live oranges would show up from Florida, we wouldn't have to drink orange juice like that. We would, because we could never buy like there was no like Tropicana that they have now, right?
It was just in a frozen brick of.
Well, yeah, but not like not the good stuff.
Do you remember that? I mean, that was crazy.
That was and that was how you did it, right? That was how you got your orange juice, and it was and you'd scoop it out and you'd eat it like, this is pretty good, it's
I don't know how organized things were over at the Drohan household, but the Marsden household, things weren't that organized. So if you wanted OJ, you weren't like waking up and you're like, oh, Mom made she took it out yesterday, she defrosted it, she made it, she stirred it all up, she put it in the refrigerator. So when you woke up today, it was pretty good, right? At my house, it was always like, get the orange juice out. Yeah, hold on. You're banging it. You open it. Your hands hurt because it's so cold. You're gonna put on oven mitts.
You're putting it in and you're just stirring it
with hot water to try to melt it. So let's heat this orange juice up because it's going to be delectable. And then once it's all heated up, then we'll cool it down because it's from concentrate.
It's from concentrate. Right. And that was the big thing, right? That was once they figured out like, oh, we don't have to do this, or like the production got better. It was always not from concentrate. That's how they'd sell it to you, right? No MSG and not from concentrate.
After selling you concentrate for 20 years, now you don't want to have that. We have this instead.
Yeah. So, but when the oranges showed up from Florida, all bets were off, and we had this.
It's like somebody dropped the palm tree in the middle of your kitchen.
Yeah. And so we joke about this. One of the wedding gifts that we still have and I can probably count on one hand. We got this thing, and it's called the Mighty. It's got a name, the Mighty OJ, and it was an orange juicer, right?
Yeah.
Just for that. And we're like, I think when we registered, we're like, oh, we need one of those. We need a
Sure you do. Yeah, why
the
wouldn't you?
Mighty,
Yeah,
and
yeah.
so to this day we still have the
Add
Mighty
some Pottery
OJ.
Barn silverware, and you're on your way. Start a family.
Let's go. Let's go. It's the rest of our lives. So it's funny. The reason I was thinking about it because my neighbor got one sent to him last week, and he texted me and he's like, "Hey, we're not home. Can you bring this thing
the
inside
orange
because I think it's going to
front
freeze."
steps.
Yeah, that's right. So I brought it in. I'm like, and it was pure nostalgia. It was like Ratatouille. I'm like, wow.
As you're walking up the driveway, you're aging backwards as you're walking up the driveway. You come in the house and you're 10.
The only thing going through my head is not from concentrate. This is pure, real
Hey,
oranges.
Haley, where's the hand mixer so I can make some
Where's my-
pancakes? Remember the old hand mixer?
Yeah.
I can bang out some
That's
pancakes
right.
while I wait for my orange juice to come down from 107 degrees down to room temperature.
Everybody drank orange juice for breakfast back then, right? This is back when orange juice was there was nothing more healthy for you than orange juice. It's got vitamin C.
That was the thing.
This is this. You know,
How many of the options we have now?
yeah, no. This was good stuff, and great. It's from concentrate, but it's got vitamin C in it,
It's
right?
not that acidic. Enjoy it.
We would drink, right? You're like, if you're sick, drink this orange juice. That's all you need.
It's 100 degrees. Enjoy it. We just made it.
It's good. So speaking of oranges and where they come from, and we're like, so let's just get this over with. Okay, so you went down to Florida, went on spring break.
I did.
And you were saying, you were alluding to that there may have been an injury. Are you okay?
Totally fine.
You look okay.
Totally fine. Recovered fine. All good. No trips to any type of facilities or anything like that.
No urgent
No
care.
urgent care, no emergency room. Just a lot of shenanigans for a couple of days. Great fun. The challenge we discovered last week when you go away and you stagger your arrivals. For those of you who are going to be going away in the next couple of weeks, okay, you're hitting a couple of spring break parties, or maybe you're going away for April vacation. You got to be careful of one thing we discovered this week. You got to watch out if you stagger your arrivals. Okay, what you may wander into is you might run into a couple of first night situations, right? Because usually everybody gets on vacation, they're all excited the first night, you're hooting and hollering, you're swinging from the chandeliers, right?
Everybody's strong at that point.
Day
right?
one,
Yeah.
you're fired up, right?
Yeah.
The weather's, oh my God, we just left Boston, even though it hasn't been that bad, but like, oh my God, can't wait to get this,
the
this,
sun.
and last week it was like, I can't wait to get this long sleeve t-shirt off, right? Because it hasn't been that cold, right? But so you get down there and you're like psyched to have flip flops on, the Coronas taste like God handed it himself over the bar to you, you're loving life, right? So then you go to the next night, and then more people arrive. And then guess what?
It's their
They're all
first night,
excited.
yeah.
So you're going to get pulled into their orbit. You're going to get dragged into their energy. And so now they're doing the same exact thing. So you're like, oh my God, this is great.
I have to entertain, right?
We're so excited. When in Rome,
I have to be a good host, right?
Yep. So if you get to night 3, and then you have
more-
another new arrival,
Yeah,
okay?
yeah.
Now the new arrivals, now it's a staggered effect of, so by the time everyone's done getting there, if you're there day 1, let me tell you something.
If you unlock the door, right?
It feels different at 55 than it did at 35.
Right.
That's
It
my
feels-
point.
it
That's
feels-
my point.
That's
my
like spring break is a little bit different.
Yes,
Yeah,
that's right.
at
That's right.
55.
That's right. So, I don't think I remember yawning as much on spring break as I did.
Yeah, right. I know. I think I slept pretty good.
Let's see what's on Netflix.
Shit, what do you
Let's see what's on Netflix.
You know what? This is a good TV.
Oh, Band
Jay.
of Brothers.
Yeah.
Oh, I haven't seen this. Let's watch all 10 of them.
Watch it again. Let's watch it again.
Oh, Caratan. Great episode. Great episode.
Yeah.
You guys go on. I'll catch up with you.
No. You guys, you know how to get there, right? Yeah.
Yeah, take an Uber. I'll take the Uber. God. So that's it. That's all.
All right. Well,
Note to self. Note to self.
All right, well,
when
just-
you're
that's-
staggering your arrival, just manage.
Yeah,
Manage.
Yeah, a
manage
little
the
bit of
rest
pay, right. It's almost like clarify your expectations.
That's right,
Right.
that's
And say,
right.
okay,
Yeah.
I understand that this is your first night here.
That's right.
Here's what we're gonna do. And it's all. You know what you need? Like anything, you just need a plan, right? You need a plan. You need like some sort of and it doesn't have to be like a strict schedule, but you need an outline.
You need a loosey-goosey outline of where things might go. Because if you don't do that, they go someplace you maybe weren't expecting them to go. It's It's
and then understand that if you decide to veer off the plan, you're on your own.
That's right.
Yeah,
That's right.
This is our plan.
You want to get down this alley? You're going by yourself. You're going by yourself. I don't know what's down there.
You're
I don't
on
know.
your
Just put this Apple AirTag in your pocket. We'll talk to you later. Yep.
Is that you get those when you go to the Marston's Hacienda down there?
Yes.
Yeah, everybody get one of these because let me tell you, you can get turned around down here.
I have 9 college-age gals coming down in a couple of weeks, and it's going to be I'll be handing those air tags out like it's communion.
This is
Keep an eye on everybody, please. Thank you very much. Puppies in a box. Puppies in a box. Puppies in a box.
Right, and you have and do you have like a war room down there? Like you like walk in and then there's like a big screen TV with drones, so you got live feed.
I can see everybody
everything.
where they are.
Yeah, I can
That's
see
right.
all of Key West, right?
That's exactly right.
And I see where everybody is with the little name underneath them too, right?
There's a siren if somebody tries to leave the island.
That's right. That's right. Kendall, and everybody's got comms, right? Too. Everybody's Kendall, listen to Dad. Listen to
you got to. What's your 20?
Yeah, you're getting close to the edge of the perimeter. We need you to pull back south and west.
That's right.
Yeah,
that's right. I'm gonna step back. Please retreat. So that's it. So how about you? Well, how was your week?
Oh well, we didn't go anywhere.
Nice.
It was
All right.
really
That's
good.
exciting.
My dog is still untrained, which is really
Excellent.
good,
That's fun.
but still she's a good dog, and she's she's trying her best. But the problem is, like, as you remember, and that's the thing is, it's been a while, right? It's been a minute.
You think the puppy's going to be like the one you're replacing?
Yeah,
And
well,
it doesn't work that way.
Well, that was what we sold ourselves on.
Sure.
So our last dog, God rest her soul, Mrs. Frisbee, we didn't train her, and she was like. And she's a Springer Spaniel, and we didn't do anything. There was no heavy lifting with her, and she was a fantastic dog. Like, not a mean bone in her body. Never didn't
all came together.
Right. And so we think, oh well, if we get the same breed of dog from the same breeder,
why not?
It will be at female. It'll be the same exact dog,
experience,
and that is not.
No.
Our new dog, she is all dog,
Oh,
like
boy.
all dog, and like nope, everything's really. And it's funny because now she's like almost 6 months old, right? So she's about full grown, size wise, but she's still like, I'm just gonna everything.
You only get 18 more months to go before it might get better.
Everything, and so the housebreaking thing was pretty cool, right? And I'm like, all right, well, I think she's come along. I think she's there. And I was thinking of you the other day, right? Because I remember every now and again you go to your office and there'll be a dog there, big, right? And then, he managed them and everything. So I'm like, I'm going to bring her to the office, and the girls aren't there, so I'm going to, it's just me and her.
Sure.
I bring her to the office the other day, and boom, she drops a bomb, right? Right? And I'm like, and she's looking at me like, I told you how to go to the bathroom. I'm like, you didn't tell me anything. You just went. No, it's
fun. Clients love that.
It's like, watch out.
Nothing,
See that paper towel?
Nothing says high-end firm like that. I tell you, we talk about that all the time.
Nothing says like, why don't you just move this to your garage? All right.
So what are we talking about? What's on your mind?
Well, we had talked about a while back. We'd done like our late planning, right? And then I'd wanted to kind of carry that into some. I wanted to go back to some basics about talking about insurance, right? I wanted to kind of revisit some, because we get this question a lot, and it's good to remind people, I think. And one of the things we talk about, and again, we give our life insurance guys and our annuity guys like a hard time all the time about they're all life insurance is a hammer, everything else is the nail, and then we kind of go into everything has a purpose. But what I've come across lately, again, and maybe this is because I'm kind of separated from the life insurance world that I grew up in, but people are like, I got it. I think I got it, right? And so, I have it at work. I have this and that. So we kind of remind them of like, look, this is you're buying this for nothing more than really a good night's sleep, right?
Yep.
And and then the idea of, well, if I can get kind of more of these bells and whistle policies that cost a considerable amount more, but they're designed to achieve some other purpose or accomplish some other goal. So I kind of want to go back and just say, all right, let's kind of remind everybody, okay, this is what insurance is for, and here's what you need, and here's why you need it, and then everything else that you kind of do on top of that. That could achieve a purpose that you want to do, but it may or may not be the best way to do that, but to accomplish that goal.
Yeah, it's funny. We have had some fun at the expense of our life insurance brethren for a whole host of reasons, right? And I agree with you. I mean, we kind of approach it the same exact way. Insurance has a purpose, right? It's not the solution to every problem. It has a purpose. It has a very kind of a, not a specific niche, is a little bit too narrow of an interpretation. But yeah, it has its role, and there's reasons you have it, right? And you have to understand going into it what your insurance is designed to do, right?
Yeah.
And you're gonna, and, you know, and in many cases, and we joke about this with clients all the time, especially in the long-term care side of the equation, where people are always aggravated and they're worried that, you know, I'm going to pay for a long-term care insurance policy and then I'm never going to use it, right? Yeah. And I always tell people, well, your house never burned down, right?
Yeah.
You're not bummed out about that,
yeah.
right?
You pay for car insurance.
Yep. You didn't get an accident.
And it's not like you're looking to crash into something.
Health insurance, right? You haven't had a heart attack. You haven't needed to go to the ER, get the full value of your policy, right? It's there for a reason. It has a purpose, right? You've talked about that, about almost every financial solution that you guys put together is it comes with a purpose. Insurance, I completely agree with it. Same exact role, same exact. What does it do for you? Why do you have it? And don't beat yourself up about it, because you're going to be glad you have it when you need it.
Yeah, and so what I've, you know, and I kind of wanted to tie this into the estate planning piece of it, as well as like how, you know, because people be like, well, do I need my insurance policy anymore?
Yeah.
You know, that you'll get that question like, okay, well, you know, my kids are out of the house, I'm retired or whatever. What do I need it for? And the purpose of it could change, right? And there's a lot of good examples of where we'll tell people, look, if I'm you, if I'm in, you know, and that's kind of how we do it, right? If I'm you, I'm not gonna keep this insurance policy.
Yep.
But you may want to keep it for reason A, B, C, or D.
Correct.
Or I may say, look, if I'm you, and again, you know, you kind of look at the whole picture. And we'll talk about this of like why you may choose to keep the insurance policy, or at least not to make a decision on it right at that moment.
Yeah.
So
let's take a quick break. Jump back in.
I mean, we'll take a quick break. We'll stretch out a little bit because, you know, coming back from spring break.
I'll tell Tommy about the new golf clubs I just got.
Whoa.
See? Now he's smiling.
Now he's interested.
He actually blushing
Now
a
he's
little bit, I think.
interested.
Yeah, all right.
So, and Tom, before you got here, Tom, I said, Tom, what do you want to talk about today? And he goes, I want to talk about Bitcoin. I'm like, no, we don't know about that. We're not.
I heard about that, but
we can't.
Let me look that up. Hold on.
Yeah,
How do you
he's like,
spell that?
we're talking about blockchain.
How do you spell that?
So, unfortunately, you're going to go.
It's another show. It's another show, Tom. It's another show.
That's the next show. All right. Don't go away. Stay with us in this gorgeous Saturday morning. I'm sure it's gorgeous.
Absolutely.
Saturday morning here on My FM 101.3 and Holliston Hub. We'll be right back.
Tommy on the back. All right, we're back. My FM 101.3. Jay Marsden with the Marsden Law Group. John Drohan, Main Effort Financial. Tom joining us here in the studio in glorious downtown Milford, Massachusetts, overlooking the park right here on Route 16 in the My FM 101.3 Media
We should
Center.
know the name of that park, and I don't know
All
it.
right. If you know the name of the park, call it in, and maybe there's a prize. Maybe not, but maybe there's a prize.
There's definitely a prize. Speaking of prizes, I saw my buddy the other day, Johnny Marino, our T-shirt.
Oh yeah,
yeah.
Yep.
So
the merch guy,
so
from Money in the Law.
Yeah, there's going to be another Money in the Law another printing of T-shirts. So, again, you know the rule. The way it works for Money in the Law is that if you see our show, listen to our show, or hear about our show, and you mention that to one of us, or even to Tom. Tom, you can, you let you're out there too.
He's part of the team. He's out there working.
Part of the team, right? If you mention to us, then you probably will get a T-shirt. Now it may not fit, but it'll be a T-shirt. It'll say "Money in the Law," and you will be
boy small, but you got the T-shirt. You got the T-shirt.
I mean, how many times have you
put it on a pet? You can do whatever you want to do.
Yeah,
but it's available for wearing.
How many times have you been to to your exercise place, right? And people have seen your Money in the Law T-shirt and said, "What is that? Oh my God, I've heard of those guys. That is fantastic."
I usually get the "Are you him?"
Yeah.
I usually get that.
All right.
And I say, hold on.
Well, I do have.
No, I'm the other one.
I do have a real life side. Before we get started on this whole insurance business, so my barber, my dear friend, Mr. John Souza, I apologize to him because the last time we did a shout out to him, right? And I said, I made you kind of the official barber, the unofficial barber of Money in the Law, and so I said, listen, as soon as the filming of the Holliston Hub gets done, I'll send it to you. Send me your email. He gives me your email. 2 weeks go by, I totally forget to give it to him. I see him this morning, and he's like, "Hey, you're gonna send me that thing?" I'm like,
Still waiting.
And he said because I was at the gym, and somebody came up to me and said, "That guy really likes you." And I was like, "You mean someone was actually listening to the show?" So they're out there.
So now what I'm hearing here is the show is turning into, at the end of a show it says, clothes buy, this buy, hair buy, you know.
Yeah,
So we're
exactly.
getting to that point
Hair
now, right?
buy.
T-shirt buy, haircuts buy. That's right. That's right. Yep.
Yeah, I don't know what our wardrobe. I don't know who that. I mean,
That's why I'm saying T-shirt.
That's right.
Let's focus on it. It's a niche.
right.
It's a niche.
We'll stay
I
with
love
that.
it.
We'll stay with hair.
Sportswear provided by.
But I did
called sportswear.
I did ask John. I said, so I said I'll ask Jeff. So where? Oh, you get your haircut right in town, right?
Yeah.
Right. And
I'm lazy.
yeah.
Yep.
But it's not lazy. It's just supporting local business.
Yeah, they do a great job. Been going
Yeah.
for a million years. So
Yeah.
I'm like, look no further. One of the hardest things to replace when I moved out of the city, my barber.
Is your barber?
Yep.
Yeah. And right. And that's a big deal. And again, I hate to sound sexist. Women don't get it. Men too care about their hair. Men too think it's right. Tom.
was John, everybody.
Tom, where do you
John.
get your haircut?
I'm looking for a new one.
Oh, he's in the market.
Look
Look
no
no
further.
further, I
John
think.
Souza. Yep.
John, try them both.
Sampson and Semino, right in Hopedale, right
John,
up the street.
John, try them both. Try them both. Come back. Report back. Let us know what you thought.
Right,
Love
here's
the experience.
here, like I said, I have a personal relationship with John. So
Clearly.
he's my buddy, and I've been going to him back when he was working at Stock's Barbershop. So that's where I first met him. Mr. Don Stock was right down the street here in Milford.
Lost on me, but go ahead.
He's right there,
Yep.
and he retired. And John was kind of like his
Protege.
Padawan, yeah, and he was the Jedi Master, and now John
There you
is
go.
the Obi-Wan
There you
Kenobi
go.
of barber. All right, you know what, Tom? We're going to get you there, and we're going to get you a really good haircut. All right. So
We're talking insurance.
we're talking insurance. We're talking about like the.
Do you have haircut insurance? Because I think you might want to call in.
Are you
call in a
kidding me?
claim.
No need, Norm Sneed. Oh, way.
All right, go ahead.
This
Go ahead.
is-
Go
yeah.
ahead. I'm just messing with you. Go
So
ahead.
I'm just messing with you, or am I? So we're talking about insurance, and we're talking about and primarily life insurance, and how it has to have a purpose, it has to achieve a goal, and for the most part, most of the time, especially with like younger people, life insurance people who are still working, life insurance will position it to say that it's designed to be an income replacer. Now, is it going to replace all of your income?
Sure, probably not.
There's a chance it may not.
It could, depending on how much you buy, but you don't know. Yeah.
There's a chance it may not. Right, but then you kind of and that's that age-old question. Say, okay, so I get it. It's supposed to replace my income, but is it designed to replace all my income? Because if it is, and I make $150,000 a year, then I may not be able to afford that much of life insurance right now.
Yeah.
I may need to deploy my assets strategically elsewhere and not just in life insurance.
Well, it's funny. There's all these calculators. You can go online and you can find 1,000 how much insurance calculations you should buy,
Calculators.
right? There's a million of them, right? So, but it's funny. We look at it the same way you look at it. We look at it and say, look, how do you want to approach this? If something happens to either one of you, right? And there's some cases, there's one person that's carrying most of the income. There's one person that's providing a lot of care, let's say in the home to kids, and so, everybody comes at it differently. So the need for life insurance might be different, right? You're replacing one income versus somebody else's income, But we would say that's exactly how we would approach people. We say, look, if something happened to you, we point to somebody in the room, right, and say, then this person over here is going to continue to work, and so their needs are going to be, you're going to need to replace something different, right? If something happens to you, and that the primary breadwinner, if there is one, is taken out of the equation, that's a different animal.
Yep.
That's a totally different animal, and so the insurance needs are going to be different based on the people you're talking to, in the room, people in the room,
and their situation too, right?
Yeah.
So you say, so like if people have young children, and let's say one of the spouses is a stay-at-home spouse and they're taking care of the kids.
Sure.
And the like you said, the primary breadwinner is no longer like earning bread anymore.
Right.
Then you're like, well, that's a different animal, especially because that's different than if, let's say, the kids are out of school, or the kids are older and maybe you're both working, so you have like there may be a different need, a different income requirement at that point. And then, there's because it's one of those things where, and I've seen this before, I've seen this kind of in the insurance industry where these guys will come in and they want to get down to the nitty gritty and be like down to the penny of like, okay, here's why you need $4 million worth of life insurance, because it will cover, you have a $400,000 you owe on your house, we'll pay that off. You have 3 kids, we'll be able to pay for their college. Like there's that kind of justification.
They're solving a lifetime of problems with one product.
Yeah.
In one conversation.
And at one specific point in time.
Correct.
Yeah.
Yep.
So as and again, and it's one of the, you talk about, you're an estate planner. You talk about kind of the inevitable like all the time. Like
Oh,
it's,
yeah.
it's like, hey, listen, so when you're dead.
Yeah.
You know, let's
It's
say
not
the
if, it's
D
when.
word.
That's right. It's not if, it's when. Yeah.
You know,
Yeah.
and so it's not like the most pleasant conversation, and it's not, and nor is it something that you want to dwell on when you're 35 years old or 55 or 75 years old, right? You don't.
Well, you know what? Well, let's talk about that for a second. That's a great point. You don't want to dwell on it, but you have to have the conversation.
Exactly. Right. Yeah.
No. Does it need to be a 4-hour long shakedown about the fact that when you're dead, like that every sentence leads with when you're dead, when you're dead. I mean, we've taken the same approach on the nursing home front to say, look, first of all, nobody wants to talk about which one of you is going to a nursing home because it's probably not going to happen. Let's just talk about, from a lifestyle perspective, what we want to have happen from a positive place. We look at life insurance the same exact way. No one's going anywhere. This is a tragedy plan.
Yeah.
But if something happens, what size check would you like to get that you think would make things better, given this tragic, horrible situation, compared to having nothing?
Right, and then the good planners at that point will say, okay, so here's a potential contingency of what could happen, right?
Sure.
And we're not saying, because again, this is based on a potentially it could happen. We're hoping that it doesn't. We're hoping that you don't have an untimely death. But
Right.
if you do, here's a potential scenario of the way this could play out. So, yep, let's say you still owe money on your house. How much do you have to pay per month on your house? So you look at kind of like your income. So we could potentially, we say, we may use some of it to pay off bills. We may, or to pay off debt in order to streamline your income stream, right? And then say, depending upon like how old your children are. And we kind of play this out, right?
Yeah.
But not in a, like you said, not in a like nitpicky detail. We're going to print a report out and have you sign, not like that. But
Well, we've talked about this before, right? If your mortgage is $3,000 a month, I'm just picking that number out of the air, right? That's $36,000 a year. So you have to earn, I don't know, what are you going to earn? 60, right? Before
50 something,
taxes,
yeah, right.
To pay off 36. So you get into these conversations and you can easily say to somebody, if we just accomplish these 3 things with this much life insurance, that's a better scenario.
yeah, and a better scenario, and one of the things we will always say is, look, this is the reason, for me, and again I use myself. The reason that I want to have life insurance on me is because it's going to be crazy enough. It's going to be bad enough if something happens, right? It's going to all the money aside. It's like it's going to suck. Like there's going to be it's a huge change. So at that point, the last thing you want to do is throw in like more stress, more anxiety, more with the money piece.
But think about how different, this is a great point. Think about how different your life is today than it was, let's say, 15 years ago.
Absolutely.
Right? So 15 years ago, when you're doing this with a couple and their kids are little, and remember, right, and I know you can speak to this because you went through it just like I did. When your kids are 5 and 6 years old, you cannot, no matter how much you try, you cannot imagine ever on your best day what your college-age kid is going to look like,
right?
What kind of college-age kid you're going to have, and you can't even envision what your own life is going to look like when your kids go to college.
You're going to imagine, and even if you live next door to people who have kids in college, you look at them and you say, wow, those guys look old. Wow, those college kids, they're miserable kids. They're,
terrible personalities.
Yeah, right,
They
I
don't
don't
talk
like
to
those
anybody.
kids, right? Yeah. And you're like, well, I know we're not going to be like
never,
that.
never. I'm a way better
I won't
parent
look
than
as
them.
old as,
No, I'm
as
way
Dave
fitter than
next
them.
door.
Yeah. But my point is,
You can't see that. You can't see that far.
And you can't see where your life is at that point, right? So when you talk to somebody and say, look, I'm not sure you need $9 million worth of life insurance. The agent would love you to buy $9 million worth of life insurance for a whole host of reasons. But I don't think you need 9, right? Because this is a window of time, and on the other side of this window is the other side of your life, right?
Yeah, the next chapter.
That's right. And all the things that we've joked about on the show. Someone's going back to work. Someone's working more than they were working before. Maybe somebody's changing careers. So there's a whole different thing. So you are planning for a moment in time, and that moment is not perpetuity.
Yeah, and so you get to that point where you're like, okay, what do we need? And again, remember in that example that you just gave, you're in a situation where, you have other bills to pay. You 5 and 6 year old kids, you're saving for stuff, right? It costs money to live, like real money. Like, and they may be going to a different school, or you may want to start saving for college, or you may want to go to Disney's at some point. You may, there's
you got a life to live.
There's costs in life, right? And if you're only a single income, and right, 15 years ago, you may be in a different income than you are. You may be lower down on the totem pole, earning a certain amount of money, and then maybe you've moved up in the ranks and you've gotten raises and been able to increase your salary. So all of that kind of plays into it, and it takes me
kids. I know you want to go to Disney. Great idea. I love it. We'd love to go too.
Dad's buying a whole life
policy. Are you guys familiar with the concept of a whole life insurance? Kids, gather around. Gather around.
We're going to talk about variable universal life now.
That's right. That's right. It's exciting.
So
tell your friends.
So you get to this place where you're like, okay, then it's like, well, how much do I need, and how much do I need, and as important, how much can I afford, right?
Yep.
So without going into like all the gory detail
that's
of like
easy to do. No,
about the different kinds of insurance, what we'll do is and you as well, we'll look at how much money you can how much you can afford for insurance, right? How much, like where it fits inside of your budget.
I mean, you can come at this from both sides.
Yeah, and so we look at, okay, so this is our ballpark window of how much we can afford, and then there's other forms of insurance too, right? And this isn't just like private life insurance. This is insurance, like a lot of times people will get insured through their job, right?
You beat me to it. It's almost like we practiced. I was just going to say, all kidding aside, I'm not making this up. I was just going to say to you, that's an important consideration, right?
Yeah.
Because if you think, look, I work at this company, and I'm going to get my 10 times salary or whatever you're going to do, and you're going to pay extra to get
your
the
company.
policy,
Right? That's a nice, juicy
policy.
policy.
Depends on what the salary is. So that's an option. But then you have to remember, if that's the only way that you're going to be in the insurance market is through your employer, then you got to think about, what if I lose my job, right?
And if I leave my job,
and if I leave it 8 years from now, either the new company I go to, I hope, has the same coverage. They may or may not have that coverage. And if I go to buy a policy 8 years from now, it's that much more expensive, right, than the one I would have bought 8 years previous.
God forbid, if I may, there's the whole qualification.
You have a medical event.
Exactly.
Yep, that's right. So I think you're always thinking about it the right way, which is to say to people, like, that's part of that conversation. Are you going to, if you think it's a $2 million, if that's the number, are you getting $1 million from work, and are you buying $1 million? Do you want to have that type of potential? Well, I had $2 million, but now I have $1 million because I left my job, went to a small startup, and they don't have this benefit. Do I want to go pick it up and go get it somewhere else? Or how do you want to do it? It's all part of what your personal situation looks like.
Yeah, and make no mistake about it. I mean, and the great Mike D'Anzaris explained this to me, 100 years ago when he was first bringing me in the business about life insurance. And again, we tease about the life insurance desk, but they, when it comes to life insurance, they know what they're doing, right?
Oh, they know life insurance.
Yeah.
Oh, yeah, they do.
So the great Mike D'Anzaris, he said this, and he goes, look, I've been doing this a long time, and unfortunately, I've had the experience of having to deliver life insurance checks, like claim checks of people who have passed away from life insurance policies that I've sold to them, and that's a very sad and kind of like, real thing that happens. He said, one thing that no one ever says, is they never say, "Oh, that's too much. Oh, I wish I didn't buy that life insurance at that point." Right? So again, like that's kind of like, it's not a sales piece of it, but the fact of the matter is just that. It's the same thing. Like if someone gives you extra money for your kid at college, you're not regretting it. You're not saying, "Oh, I wish I didn't get it." So yeah, if something tragically happens to like the primary breadwinner, would you rather have $1 million or $2 million? The obvious answer is I'd rather have more, because again, that will give me more flexibility to be able to kind of carry on from, and not have to worry so much about finances. But the problem is that you have to be realistic in the sense like, oh yeah, I'd love to have $10 million worth of life insurance, but I can't afford that. And it's not going to be, could it make things easier financially? Of course it will. But right now, in the highly unlikely event that you're not going to use it, which is
the plan.
Don't spend all of your money, or don't spend too much of your money to put it towards life insurance for something that may or may not happen.
Yeah, it's almost like a utility bill, right?
Yeah.
You're going to get it, you're going to sign up for it, you're going to put it on auto pay, and you're just going to pay for it. and you're going to forget you own it, and you hope you never need it. And if something ever happens, it's there. But there was one time when I was transitioning out of a small mutual fund company that I worked for.
Their
in
color was
downtown
green, right?
Boston.
Their
I
color
think
was
green.
green.
Is their color, if I remember correctly. And I went through what we just talked about earlier. I said, look, I knew, in anticipation of it, I knew at some point I wasn't going to be there. And I knew that when I left, I was going to lose my big firm benefits, and one of those big firm benefits is that insurance policy. So I went out to get my own policy, knowing I need some more portability, as they say. And I'll tell you, when you go through the process and you finally commit to saying you can see that benefit hanging out there because you did the paperwork, but you're waiting for the paperwork to kick in. You're waiting for if you had to have a physical, you're waiting for the results of you're waiting for the policy to be accepted. I tell you, it's a little nerve-wracking. It sounds weird, but once you buy into the idea that if something happens to me, my family's going to get that check, and then there's a window of time where they might not get that check.
Yeah, you realize the value.
It's a little hairy.
Yep,
Yeah,
you
it's a little hairy.
You kind of appreciate the value of it because you're like, because at that point you're like, because if you don't want the insurance agent to come back and say, unfortunately, you didn't qualify, because then you're like, whoa, wait a minute, now, like that whole thing. If I can't have it, that I want it even more.
Sure.
So,
Yeah.
So I guess the takeaway from this is that I want to make sure that that in my analysis of it, I want to make sure that I'm covering like the reasonable contingencies of if someone has an untimely death. What is this life? What objectives is this life insurance policy going to satisfy? And but at the same time, I need to do that within the means and capability of the client and the person that says, look, this is how much I can reasonably afford, because I'm not going to not save for retirement in order to buy an expensive or an elaborate or a very high death benefit life insurance policy.
Well, because retirement's coming.
Yeah,
and so is your death. But the need that life insurance might be there to solve.
With luck,
That's right.
with good luck, retirement's coming way before that.
Yes, that's right.
And that's what everybody's kind of banking on. All right, we're going to take a quick break. We're going to come back and carry on this conversation because it's fascinating.
It is fascinating.
And I mean, he's actually smiled.
He's like Bitcoin,
4 or 5
Bitcoin.
times.
This is way better.
Yeah, Bitcoin, right? He's like, that's my life insurance policy. Well, crypto, right? Yeah, we'll tell that to FTX.
It's all right
guy.
here in this thumb
yeah,
drive,
that's
right
right.
here.
You, Tom Brady, Matt Damon.
Yes,
How
Sammy.
you guys doing?
Yes, Sammy Bankman. You're the man.
Look at me go. All right, don't go away. We'll be right back.
Right back. And we're back. My FM 101.3. Jay Marsden with the Marsden Law Group. John Drohan, Main Effort Financial. Tom joining us here in the My FM Media 101.3 studios here in beautiful downtown Milford, Massachusetts, on a Saturday morning. And we're talking life insurance. We're talking about, we're not diving into the details. No one's got a calculator out. We're not talking about numbers. We're talking conceptually how we think you should approach the project to sort of figure out, what do I think I need for insurance? What role is this insurance going to play? You were talking about life insurance. You were talking about having a specific purpose. One of the things that we see on the estate side is we see the purpose of that life insurance in some cases changes.
Oh, it sure does, and it's like you studied for the
like
quiz.
It's almost like we planned for it.
Yeah.
So we see cases.
Please carry on.
We see cases where people roll in and they'll say, "Hey, Jay, well, we're going through our intake with the client. We say, hey, what do you have for, what's your real estate situation look like? What's your retirement situation look like? And then we have life insurance because for the uninitiated, if you own life insurance in your name at your passing, it becomes part of your estate. So you own $1 million policy when you pass away. Add that $1 million to your estate for estate tax planning purposes. So we'll ask clients, do you have life insurance? And we'll say, yeah. And then we'll say, well, what was the purpose? Why'd you buy it? And they say, well, we bought it back when the kids were little. We want to make sure we had something, or somebody we knew was in life insurance business. We're helping them out. And if it fit in with our planning at the time.
Someone was it. How common is that, right?
We could tell 100 stories about that. That's So that's they have this life insurance policy, and then we'll have a conversation about the size of their portfolio and the value and the fact that they paid off their mortgage, and they say, look, that's exactly the question they asked. You asked it earlier. Do I even still need this policy, right? And we'll say, well, you can stop paying for it. That's one option. Statistically, you're probably at the closest point you're ever going to be to using this thing. You're only getting closer, right? So what do we want to do? So in many cases, that life insurance policy that they had potentially transitions into some type of estate planning tool for them.
Yeah, and so you're at this point, and this. We'll talk a little bit about the types of life and just kind of the basics. We'll say there's term life insurance and there's permanent life insurance. You know, the permanent could be universal whole, but
Permanent is as long as you're writing a check, you get insurance.
permanent means that policy, someone is going to get the death benefit of that policy, provided that policy stays in force, right?
Correct, yep.
Term insurance, on the other hand, is going to go for a limited term, and don't get me wrong, a lot of people don't realize this, is that term insurance, they'll keep giving it to you.
Oh, yeah.
Like, you won't have to take a physical. So if you have a 30-year term policy, and it's funny, I've been in the business long enough now where we're starting to have these policies that we sold way back when that are like, they're coming to the end of their term. And people are like, hey, I just got a letter saying that my term insurance was $15 a month, and now it's going to $463 a month. And you're like, yeah, that's because your term policy is ended. But the life insurance company is more than happy.
They would love to keep taking your money.
More than happy to continue that policy. And every year that policy is going to go up rather exponentially, because what again, it's all about risk, right? So they don't know what your health is right now. So in order to sustain, to alleviate their risk, they're going to charge you a much higher premium.
Yes, they are.
So I've never, unless someone is terminally ill and they know that they're going to pass, and we do the math on it, and we've never had this happen. So
no, but unfortunately, it's a mortality play. That's what it is.
In theory, right? So theoretically, there may be a situation where you'll actually keep the policy and pay the insanely higher premium. 99 point whatever, that doesn't happen. So
Correct.
At that point, so the end of so if we're talking with the estate plan piece, usually the conversation is, okay, I have a term policy, and then we're talking about term. I have a term policy, and let's say I have 5 more years left on my term, right?
Yep.
And my kids are doing I've just met with the lawyer, the guy he's funny. He's not quite as funny as you. He's right around the corner, nice guy. Little, he was wearing some sandals. I'm not
little
really sure
laid-back
why.
approach.
Yeah, there was sand on the floor. I'm not sure where that came from.
Yep.
But he said, look, our estate plan is buttoned up. And I have this, $1 million term life insurance policy that ends in 5 years from now. What do I do, right? And so so now, in likelihood, and let's say if unless you're 105 years old, that's different. But let's say if you're like 70 or 75 years old, there's a pretty good chance that you're going to be around in 5 years, right?
Yeah.
Anything can happen.
Sure.
But so you may never that term may expire before you do.
Correct.
So if that happens, so this is where we ask the question. Say, okay, look, it's $1 million policy. Obviously, if something happened to you tomorrow, you would want, provided that it all worked out, you'd want that additional $1 million to go to do whatever you needed to do.
Yeah.
But at the same time, do I need it? Like, is it going to change because there is a good chance that I'm not going to die in 5 years, and then it goes away anyway, and I will have paid the premium on it, right? So
Okay.
So now the question is, what purpose is that? And it all comes back to the original one. What is the purpose of that policy at that point in time, right? Is it going to replace my income? No, I'm retired, right?
No, now it's found money.
Yeah, so my
could be found money.
Could be found money, right? But I have income. It's not going to replace my income because if I die, my income is, my wife's going to get my Social Security. I'm drawing income from my assets. I may have a pension that my wife is going to get, be part of. So then you say, okay, well, if you think that it's not going to change your glide path, do we need it?
Right.
Do we need it? So that's the time where we'll oftentimes say, look, if it's me, it's not. Yeah, it'd be great to have an extra $1 million, but if it's me, I'm not playing the odds and thinking that I'm not going to outrun this policy. So,
See, it's funny. I think differently. Doesn't happen often. I think differently.
you think? Did you say incorrectly?
I think differently. I think differently. Sorry, it sounded like you said it correctly. I would say to the guy, keep it.
You can make an argument.
Let it
Yep.
ride. And in most cases, we've come in as a jump ball, right?
Yeah.
But I would say to somebody, you got 5 years to go. You've been paying for it in 15 years, 20-year policy, or 20-year, 5-year policy, you've been paying for 30 years. I'm like, you got this thing. You've been paying on it all these years. You're 65, you're 70 years old. All right. You're 60, things can happen at 60,
Yep.
65, 70, or 70. I said, at this point, and you're probably in the best position to be able to afford it. right?
Well, that's the question.
So-
That's it.
That's it.
No pun intended. $1 million question.
Yes, it is, yes.
So the $1 million question is, hey, this is short money for me, right?
Right.
So if it's a $50 a month, is it going to make that much of a? Is it a game changer from that? And you'd be like, no, it doesn't. It doesn't change. And you know what? In the unlikely event something happens to me, then it's here. And like you said, I've been paying for it for all these years.
It's part of my legacy. That's
So-
great.
So again, but this is the conversations you have in the planning. Say, okay, understand that this is like extra money. This is found money, and I'm playing the kind of the reverse inverted lottery, if you will.
Well, but if somebody comes in, like we talked about on the show a couple shows ago, and somebody says, look, I'm late to the game on planning, and I have not done all the things that I think I should have done, you could say to them, well, depending on what you're paying on this policy, maybe that's, we're not focused on you passing away and you're leaving money. Now we're focused on you accumulating retirement assets.
Sure.
That's a real reason to say, does it make sense to get rid of this policy?
Sure, and that's and oftentimes we'll get to that point. Like, let's say someone's paying a couple $100s a month
Yeah.
for a life insurance policy, and then you're like, yeah, I know, I get it. Like, it would be great, to pass on $1 million. I know you, or you may be thinking in your mind, this is part of my estate. I want this.
Yep.
I want to leave this for I want to leave something for my
Sure,
children, right? Or I want my wife to be okay. You're like, look, no. The term policy, that's not an estate policy.
Right.
That's not a good bet for an
It's a
estate plan.
tragedy policy is what
Yeah,
that is. Yep,
exactly.
that's right, that's
So
right.
and that's the difference between having a term policy versus the permanent policy is that with estate planning, we only talk permanent policy. We
Yeah.
only if someone says to me, "Hey, I want to make sure that I leave something behind, or I want to make sure that I have money that will pay maybe a state
I have an estate tax bill.
estate
Yep.
tax bill, or some I want to have some instant liquidity." So when I do pass, these debts will be able to be paid.
These
and
guys
then,
can keep the real estate going.
Exactly.
They can do a couple of things. They don't have to wait out the whole process. That's probably the best from a planning perspective. That's probably the best way to, number one, look at it, and number two, present it to a client to say, look, the term policy is T for tragedy, right? Term policy.
Write
it's
it
a
down,
tragedy
guys.
solution,
Write it
right?
down.
And permanent policies are to pay your insurance guy, or pay your financial guy, or pay your lawyer, right? That's what the P is for. But it's part of a bigger plan, right? Is
Right.
what I'm really going. P is part of the plan, right? T is the tragedy plan, but the permanent policy is really part of
That's
a
your
little
planning.
bit of a deeper dive on the planning. And we'll see a lot of that come in. People will come in and say, I have some of these things. What do I do with them? And in many cases, we'll say, well, we think the answer is you bundle them all up if you're going to keep them, and you get them out of your name. You put them in an irrevocable life insurance trust. You get them out of your name. We walk through that plan with somebody, and then it becomes, A, instant liquidity, and B, it solves an estate planning problem because they're not in your name anymore. And so, we always have those conversations with
yeah.
clients.
So without going into like the details of the ILET, which Jay just alluded to, it's what it is. It's a policy. Again, it's just a different purpose that it's a
It served
different,
one purpose when you bought it, and we're converting its purpose to another purpose.
Yeah, so that's the other thing is like you have these term policies, and oftentimes term policies can convert to permanent policies, and then you kind of get into that. Well, if I'm going to remember the way life insurance works, it all depends on how old you are, right?
Oh,
so,
yeah.
So the cool thing about these term conversion to permanent policies is that you don't have to take another physical. That they'll say, okay, we'll convert it.
Yep.
And you have usually it's a time period, 10 years or so, that you say you have that much time to convert it to a permanent policy. However, when you do convert it to a permanent policy, your term costs one thing, and then maybe you do it 8 or 9 years later.
It's a sizable increase in premium.
Yeah. And again, it's all based on life insurance policy. The companies, they charge the amount of money for their estimated risk on this.
Well,
right?
that's right. They sat down and they said, okay, you took this policy out when you were 40. You were in relatively decent health, right? We knew from an actuarial perspective, you're probably going to live to be 80. So you get a 20-year policy, 20 years. Yeah, we're good with this, right? Well,
Yep.
the house always wins. We'll take these odds. This works out, right? Then you roll in at 60, and you're like, hey, I've had 20 years of hard living behind me, and I'm 60 now, and I want this policy to go on for the rest of my life. And they go, whoa, Yeah, we'll do it. We'll do it.
Because
Get your checkbook-
because
get your checkbook out.
your option is you could say, well, I'll apply for a new policy and take the physical and do
Yeah.
that, right? And then if you're like, Jay Marsden, who's like, like
A specimen, physical specimen.
truly, right? Like David.
Yeah.
I mean,
Yeah.
David maybe like from the neck down, right?
Sure,
Yeah.
absolutely. Yeah, that's right. That's right.
So you're a guy like that, and he'll pass a physical like without even trying. But like you said, if you're a hard living or whatever, your health didn't work out the way you thought.
Yeah.
You may not qualify for life insurance. So at that point, you're like, okay, my only choice is if I want to keep a life insurance and have life insurance, my only option is to convert the term to whole. And the insurance companies say, here's our risk on that.
That's right.
And then that is translated into how much it costs for you to do it.
Yeah.
And again, then it all comes down to, okay, what's the purpose? Can I afford it? Is it worth it? Is the cost worth the benefit of it?
Yeah. Yeah. The answer might be, that money's better deployed elsewhere. In many cases, we'll talk to clients and say, look, you've solved your tragedy problem. You lived, right, which is what we all want, right? You lived through the risk of that 20-year period where you had a term life insurance policy to create an instant estate. Now your risk transfer is long-term care. Right? So in many cases, we'll say, why don't we talk about redeploying those assets out of a term policy, or take the assets that were already being deployed into a term policy and now talk about, let's deploy those assets to a long-term care insurance policy, because that's now the next risk that we're looking to insure. We insured your mortality, now we're looking to insure your long-term care. That's the transition. And you come into this world covered by insurance, and sometimes you can go out in the world covered by insurance as well. That's part of that analysis.
Yeah, and again, remember the long-term care that what you're really insuring is if you're going to insure your long-term care, is you're insuring your money, right?
Yeah.
You're insuring your money, and you're insuring your capability to possibly have options of different types of different
Better options,
different
better
long-term
care options,
Yeah.
and to your point, you're building a wall around your money using the life insurance company's money to protect your money.
So at the end of the day, it's again, everything that you do has to be for a reason. Has
Sure.
to be able to achieve a goal that and your goal may be, I don't want my family to have to worry about money if something were to happen to me. Right?
Well, when you're young, I don't want my family to have to worry about money if something happens to me. And then when you get older, I'm not sure I want my family to worry about paying for my care. Right? Insurance, two different purposes.
Right.
But the idea is to take care of you
and
your family.
And enter the life insurance or the long-term care insurance guy, and they say, "Here we finally I get this appointment so I can solve your problems."
I finally get the love I've been seeking and
Yeah.
searching for from Money in the Law
And again-
for 12 years.
That's right.
So it took us 12 years to get here,
Yeah.
and here we are.
And again, the caution is that, remember, the insurance people, they're selling you a product because they will get paid if you buy said product, right? And again, and we're not saying that the product is bad. We're not saying that that you're getting ripped off in any way, shape, or form. All we're saying is you need to understand. This is the takeaway for today. Understand what it is, what goals you're trying to achieve.
That's right.
And what the cost is in order to achieve those goals.
What purpose does it solve?
And
what purpose does it serve?
Yep. And if it makes sense, and it makes sense, and again, and another thing which the insurance guys often don't really comment on is, okay, in order to solve this, what am I kind of putting to the side, or kind
Sure.
of putting to the back burner, where maybe that's something that is more real. And this is why you kind of need to talk to your, like the real estate planner, your real financial planner, and say, look, yeah, that's right. If something were to happen to you, that would be bad. And you know what? A $2 million whole life policy, that's never going anywhere so long as you pay the premium. So
Right.
someone's going to get that money no matter what.
Yeah.
However, that $600 or $700 a month
could be a burden.
that you're paying on that. And even if you're making good money,
Sure.
even if you're like, oh, I'm making, and because that'll happen.
But that's real money.
I've seen this. I've seen guys that are making like strong incomes, and like, oh yeah, well, I have this, permanent, this universal life policy or this whole life policy. I'm like, yeah, that's all well and good.
Yep.
But you know what? You only have, X amount of dollars in your bank account. You don't have X amount of dollars in your brokerage account.
Right.
If instead of putting, $60,000 a year towards a life insurance, like a $2 million life insurance policy, why don't you put $3,000
Yeah.
in a term like same thing,
Yep.
achieves the same goal, and you know
deploy
what?
the rest of that to a 529 plan and cover some college costs.
Right,
Yeah.
or bury it in your backyard,
Yeah.
and you'll have more money,
Yeah.
right?
Yeah.
Not that we encourage burying
Nope,
in the
not at all.
backyard,
No,
especially-
bury it in my backyard.
But-
Yep, that's right.
You buried in my backyard. My new hound is gonna
Dig it up.
that thing
Dig it up.
Yep, along with $1.6 million. All right. So
The red light's flashing. We gotta go.
the red light's flash. All right,
gotta go.
Tom. Great job today. I hope you learned
Fantastic.
something about Bitcoin.
We'll be back with
because,
Bitcoin.
yeah.
We'll be back. Don't worry. We'll do
All
a
right.
show about it.
Hope
We'll do a show
everybody
about
else understands. Thanks for listening to us today. I hope
Always.
you enjoyed the rest of your Saturday. I think, you know what I think you brought with you when you came back from Florida? I think you brought a little of that nice
Little
weather.
ray of sunshine. That's how I
A little
work.
rainy
That's how
today,
I
but you
work.
know
It's
what?
warm.
But
It's warm.
It's you know what?
Yeah.
I wasn't wearing a hat this
Nope,
morning.
that's right.
All right.
That's right.
All right. We'll see everybody
Guys,
next
have a
time
great week,
on
everybody.
Money in the Law.
Take care.